Hello, thank you for attending. This is Seewing Yi from the Yi Real Estate Network. And my special guest, once again, is Mr. Richard Advani from Supreme Lending, a loan agent that help investors to purchase investment properties with financing in all 50 states. He also does owner-occupied home loans for primary buyers. He also does refinancing and etc. So thank you for attending, Richard. And today's topic, Richard, I know you are investment loan agent. You've helped many real estate investors, including our members, to buy out-of-state investment properties in the cash flow markets, mainly in the South and Southeast, some in the Midwest. And you yourself, understand our business model. Buying, diversify your portfolio, buying out of state, as long as the numbers make sense. Even though you and I live in California, most of our portfolios are out of California because my philosophy is live where you want to live, invest where the numbers makes sense. So I'm going to ask you to wear another hat at this moment, Richard, and pretend you are a typical mom and pop real estate investors coming from out of state. I know physically you're located in Southern California, but you could be coming from living in Chicago or Seattle or Denver or Boston or New York City or New Jersey, and where those markets were such a high price, it does not make sense to cash flow for a single family home, especially. So you go on out of state. And so let's go through a case analysis. So let me share the screen right here. So in front of you, I know the numbers could be relatively small, but I'm going to try to speak from a high level. And Richard, again, you are a real estate investor. You have done a fair amount of research. You have determined that Durham, North Carolina is potentially, you might want to pull the trigger here. And so let's say I have, assisted you with some little bit of education prior to this cash flow pro forma analysis. So before we go over the numbers, Durham, North Carolina is, in case some of you do not know, is one of the fastest growing real estate market in the country. It's affordable. It's a good standard of living. The homes are fairly affordable for the time being, and has a fair amount of high tech, which is something you and I can identify with. Furthermore, this main hub, which is the Research Triangle Park in outside Durham, Raleigh, North Carolina. Actually, this is growing very fast. There's a lot of high-tech professionals, a lot of high-tech companies, medical research companies, et cetera, et cetera. And we also determined that it's a very fast, one of the top 5 real estate market in the country because of in-migration. People are migrating into this area from Northeast, from the Midwest, and from the California to live here because of all kind of great amenities and economic engines and future growth. And at the same time, just like in many other markets, the supply of homes is very limited and the demand is very high for owner-occupied buyers. I don't know the exact data at this moment as we're talking around April 2022 right now. Let's say, I think the month supply of inventory in this market is around 3 weeks. There are 3 weeks supply of inventory, and there's huge demand by owner-occupied buyers. Not only locals try to buy these homes, but you have, again, massive migration of people moving into this area, not just in the past couple of years, but for the past 10, 20 years, as far as I know, because I know this market. I purchased some of my rental homes I purchased here in Durham, like back in 2004, 2005. So I know this market very well. So at the end of the day, there are still bidding wars as we speak right now, as we move into April. A lot, like 20% of the buyers are investors, okay, and a lot of the investors buying with all cash. I would recommend buy with financing, 20 to 25% down payment. So yeah, that's a very hot market. It's not slowing down, even though the interest rate has hover around 5%. Investors are still buying. Homeowners they get outbid. There are many renters who want to buy, cannot buy, so they have to rent for a while longer because of huge lack of supply. So here are the numbers. If you want to buy like this pro forma, I did this. To be honest, this pro forma I should have done some recalculation, but these numbers came out like maybe 3 months ago and maybe 4 months. So these numbers that I extrapolated on this pro forma, but housing prices in Durham and Raleigh has continued to go up systematically. At the same time, rent has skyrocketed in this market as well, double-digit rental, because there's a lack of homes to buy, there's a lack of homes to rent. So you have like bidding war for renters also. So all the metrics is good. So Richard, I know you are being very patiently waiting to speak your mind. So here are the numbers. If you see this number,
Hey, Seewing, the bottom of the page is cut off.
Yeah, I don't
So
know.
Sorry, I didn't quite catch that.
We can only,
Yeah, I don't think I can. I don't know how to.
yeah, it goes down to management fees, and then
Yeah,
that's all you can see.
yeah. Let's. I think we have enough. I don't know how to adjust it, but
Okay.
I think the number is good enough for us to go through it. If you have to, I don't know. All right, so let's go on. Oh my, I went to a. Did I went to a different? Okay, go back to here. Right, so this is a single family home, maybe around 20 miles from the Research Triangle Park. It's an A- location, very good neighborhood and all that. As you can see, the list price is $345K. I'm sure it's higher now. Right now it's probably $360, $370K. But let's use this example for the time being. You can do a 25% down payment, as you can see right here. Right, your down payment is around $86,000, closing cost $6,000 approximately. So your total down payment plus closing cost is $93,000. So the rent is $2,300. I'm sure the rent has increased maybe $2,400, even $2,500 as we speak. I don't have the current data, but just use this example for the time being. 2% vacancy loss, and then you have the property taxes. I know you don't. Can't show the numbers below. The debt obligation, the taxes, insurance, property management fee of 10% of the rent, and then we look at here at the interest rate is higher now. So, but the numbers are from a high level. So you're getting so the net operating income is, as you can see, 1,467 minus your mortgage payment. At 5%, whatever, let's say is at this number, $1,162, your monthly mortgage. So your gross rent is $2,300 in this case, minus your monthly debt obligations, as I stated, equals your monthly net cash flow of $305. And my projection, this is just a projection, nobody can predict the future. My appreciation projection at the end of the first year is approximately 7%. That's my metrics. And the vacancy rate is 2%, property management fees 8%. I put down even a maintenance additional cost of 5%. So I try to be as realistic as possible. So given this number, and then one more thing I want to discuss, the rent to value ratio 0.07, which is pretty realistic in this kind of market. Capitalization rate 5%. I know some of you want me to explain what all this means. I don't have time to explain that on another. We have done this on other videos. You can reach out to me. I will show you a separate video that I've done on purely explain rent to value ratio, cap rate, cash on cash return, whatever. But the important key that most investors does not address is the total return on investment, which is 35%. How I calculated that is I used the annual net cash flow at the end of first year, right? $305 is monthly net cash flow divided by 12 months equals $36.69. annual net cash flow at the end of the first year. Then we have some little bit of principal reduction, as you can see right here. And then at 8% appreciation rate, right, at the end of the first year, you're going to gain equity of like $24,000. So the nice chunk of money. So 3669 annual net cash flow plus a first year equity of 24,000 at 8% appreciation projection equals total total equity income of 32,000, right? 32,000 divided by your down payment of 93,000 equals 35% total return at the end of the first year. And now we're not even talking about second, third, and fourth year with the multiple streams of income and tax benefit and cash flow. Anyway, so you as a real estate investor, Richard, what do you think? Would you buy this property? Why or why not? What do you think is the pros and cons that you could extrapolate from your own internal analysis? So yeah, tell me, how would you ultimately make a decision to buy or not to buy based on the case scenario that I explained to you?
Yeah, absolutely. So much of obviously what is the right investment will change from person to person. If you're near retirement, obviously you're looking for cash flow, but if you're looking for overall growth, and as we talked about on one of your other webinars, diversification of your assets and wealth building, then I personally, that's what I'm after. I absolutely would be interested in a property like this. To me, these are strategic markets, obviously. All of us have this number in mind of what we would like to make on an ROI, and obviously ROIs have gone down with property values going up, with rent going up. But one thing that even this spreadsheet doesn't take into account is inflation. And I talk about it all the time, but the 30-year fixed is the best hedge against inflation. And, right now, with inflation rate being double digits, if you're making a 5% positive on this versus money sitting in the bank, once you factor inflation, you're probably making like 15%, right? Because you're not being affected by that inflation. And inflation is going to continue to run rampant for some time here. So, and then on top of that, of course, one thing that you have here that a lot of people don't talk about is your return on amortization, your principal reduction. Oftentimes what you'll see is if you're making a 4%, 5% cash on cash return, and even in this example, your cash flow every month is $305, but your principal reduction is $414, even more, right? So if you look at your overall return on investment, considering that you have principal pay down, considering that you have front end cash flow, and kind of work in the tax savings there, this is a solid investment, and it's in a market that's growing rapidly, that has all the right fundamentals to be a good real estate investment. And it's funny, everyone talks about wanting to invest in that right market and with lots of growth in the right neighborhoods, but they're not willing to obviously pay the price to do it, and there is a higher cost of entry to buy in these markets. But there's a reason for that, right? And those are all the good fundamentals that we all want. So, don't be blinded by, okay, an 8% return in a market that maybe, higher cash flow. If you have the means to buy something, obviously, like this property, just because, what is 3% extra in cash flow, right? If you look at this property itself, 3% extra in cash flows, an extra $60 a month, $80 a month, on this in terms of your gross rents. It's not a huge amount. So, don't chase just the cash flow number. It's important to analyze the overall investment. And yeah, I think this is a good one.
Yeah, Richard, I agree. A lot of investors, though, they do not understand the reality. A lot of investors, they don't understand. They have a higher expectation than what the market gives them. So you and I, the market real estate market changes all the time, and we are full-time real estate professionals, you and I, and we like to think that we are providing people with good education. So, investors, know your expectation, know what the market conditions right now is a seller's market. There's still bidding wars for these very highly lucrative homes. At the same time, what you want as an investor is good quality tenant, abundance of tenants that want to fight in tooth and nail to rent your home because of the massive people cannot afford to buy these days due to home affordability. They have to rent, so might as well rent from you, and they have the means to pay you. These people making $70,000, $80,000, $90,000 in this market, Raleigh, Durham, Charlotte, North Carolina, they can pay you even more. As a matter of fact, my current research indicate that you're not getting $2,300 on this kind of house. You're getting like $2,400, even $2,500, depending on what neighborhood in Durham, Raleigh, North Carolina. So again, 93 grand is a lot of money for down payment. Some of you cannot afford it. That's fine. For those of you can afford it and you have a long-term perspective, you buy and hold for a long time, ride out the market, let the property management do a good job for you, and just have a good venture and just stay the course and you'll be fine. So thank you so much for watching this. This is Seewing Yi, and my special guest is Richard Avani. Have a nice day. Bye-bye. All right. Okay, now let's finish up.
I'm almost tapped out here.
How much time you have?
In terms of time, I technically have a 9:15 call.
Oh, okay, never mind then. We'll do it next time. We'll do next week.
Yeah, apologies.
It's okay. So same next Wednesday or next Thursday?
Thursday.
All right. Perfect. Thank you so much, Richard.
Absolutely. Talk to you then.
All right. Bye-bye.